Hello and welcome back. If you're new to this channel, I am Dr. Stock, and in this video, I want to talk about the CPI that comes out on Wednesday at 8:30 a.m., what I think is going to mean for the Fed possibly, and then also for the markets and how they're going to react in light of the report that we get from the CPI and the possible implications from the Fed and their likely rate hike at this point in time. But first, before we get into that part, I need you guys to just help me settle a debate between me and my wife, because if you have been following this channel, you know that we were expecting a baby in June, and it happened to be on June the 19th. We were blessed with another child, a little baby girl, and my wife and I are having an argument right now. I say that the baby looks more like her, and she says that the baby looks more like her father. So if you could just help me out just real quick, what do you guys think? I mean, I get that you don't exactly know what my wife looks like, but still, I think that there's a pretty strong resemblance there to be had. So put that down in the comments, what you think about the baby. Very beautiful baby girl, couldn't be happier, and that baby part is absolutely for real. With that said, let's get right into the CPI and what that means. So in this video, by the way, I will be using the Moomoo app when we look at the markets. And so that's something that you'll see there, and I'll tell you later how you can get those free stocks. And for now, we're going to go over to the economic calendar that we have on Trading Economics. I happen to like the way that they break all this down for us, and they actually even highlight in red some of the important information. No endorsement there for Trading Economics. It's just what I happen to use. It makes it really nice, clean, easy for these videos for a whole bunch of different things, including the CPI. And so what we have here, the inflation rate, so this would be for all items for CPI for all urban consumers. 0.3% is the current consensus, and 0.2% is what Trading Economics is forecasting. And they're saying that for that headline number then that we'd have for year over year for all items would be 3.1, 3.2%. And that's a bit of a discrepancy, I think. So depending on how they calculate their numbers, these two things are related. Now, the month over month is seasonally adjusted, whereas the year over year numbers that we have are from unseasonally adjusted numbers, or seasonally unadjusted numbers, I guess I should say. So when you look at year over year, that does come from an unadjusted source. So I guess it depends on how they're calculating it. And I'll show you the spreadsheet that I have, and we can talk about the possible discrepancies that we have there. And then core inflation, so this is ex food and energy, 5%, and then for the consensus, and then also from Trading Economics forecast, and you can see consensus and forecast are both coming in at 0.3%. So let's take a look on my projections to see exactly what that means for us. So let me pop up the spreadsheet and pop that down. Bam, there we go. And I also more recently have hid this. And if you want access to the spreadsheet, it is available over at the Patreon. You can find the link for that Patreon down in the description. I also have my Tesla earnings preview up there. So if you want to check that out, you go over a week to take a look at that and factor it in with whatever trading or investing decisions that you might have about Tesla. That earnings projection, earnings preview, earnings estimate for Tesla is available over at the Patreon as well, and also my watch list of stocks, both short and long list of stocks, as well as the tracking the YouTube mentions that I've made. So just be on the lookout for that. So what we have for this spreadsheet that you're looking at now, and I had this up before, I think June 14th is when I put this video out. So almost a month ago. And so this red that we have when we look at the projections that I have, the red is coming in below what we would have. So 0.3% that we would have for month over month. For June's numbers goes with 2.9%. So we would actually skip the threes entirely, go right from 4.0 that we had in May's numbers down to 2.9. That's if we get that consensus number of 0.3 or 0.2. And I said that was strange because when we had 0.3 or 0.2, on Trading Economics, they were forecasting year over year to be at 3.1. Let me see. Let me look at it again. Yeah, 3.1 and 3.2. So they say consensus is 3.1. So that'd be between 0.4 and 0.5% for all items. So I don't exactly know if they're not working with seasonally adjusted numbers or seasonally unadjusted numbers when they look at those. But if we get that 0.3% and we get a 2.9% print, that's going to be incredible for us. And mind you, that is coming in at consensus. The market's already pricing that part of it in. Really, it comes down to more to what exactly the Fed's going to do about it. I think that we need to beat these consensus numbers to really have that impact. Let's go over to core. And for core, to come in at the fives, to stay in the fives, we would need something to be 0.4% month over month. It would leave us at 5% even. However, if we come in at 0.3, we drop out of the fives down into the fours. for those core items. Travel is going to be a bit of a bugger because it came in a little bit hotter than what we had. And remember, these numbers, the seasonally adjusted numbers that we have, are solely based on what we had for just a single year rather than on 2 years. And so that can be something that throws us off because I believe they're based on 2021's numbers when we look at the seasonal adjustments that we have for 2023. So instead of going over on a 2-year basis because 2020 was such a bust, or maybe it was on 2022's numbers because of 2021 still being off. Regardless, we're going off a single year, and travel demand has been very hot this year. So it is possible that travel could be something that would be reported as having a larger weight and something to really weight into a little bit heavier. So please be on the lookout for that. And you can see if we get those blue numbers, these I don't think we go 0.5 or 0.6. I think if we go hot on this, we go up to 0.4% month over month, which would mean 5% for the year over year print for core. And I think travel would be that thing affecting it. We're going to have to watch housing and services ex housing. Really, if we start to see that disinflation, that super core CPI that we have, core services ex housing, that's going to be something that is going to really be the thing that is going to move the Fed. So with that said, I want to get into the CME Fed Watch tool. So also I do want to summarize a little bit for the CPI. I don't think that the CPI is going to be all that surprising for us. I think 0.3, I think down to 0.2, up to 0.4. I think that's the wheelhouse. I think that's the range that we're in, especially for core. And hopefully we come in a little bit cooler than expected because I think that that's going to change the curve that we get for the Fed. So CME Fed Watch tool right now, 92.4% probability of a rate hike in July at the May meeting. I'm sorry, for July at the July meeting on July the 26th. So that's the Fed starts meeting, by the way, on Tuesday, July 25th, and then Wednesday, July 26th, they come out with their interest rate decision. And right now it is highly, highly, highly expected that they're going to get that. I find that surprising. Now, mind you, we still have CPI coming out on Wednesday, as I said. That follows up with PPI coming out on Thursday. And if those are both low prints, that we can definitely see that change here. And with the market already pricing in a rate hike and kind of making us wobble and stagger a little bit, maybe even hold its breath a little bit because we're so darn close to the CPI, that's something that really could stand to drastically change if we get lower than expected numbers. So if they get higher than expected numbers, well, I think that makes this even more certain that the Fed is going to end up doing the rate hike for July, and that the market, I think, is barely going to react. If anything, I think it could recover a little bit just because we got exactly what we expected to get. If we come in low and that drops the expectation for that rate hike, CPI and PPI, these are two very big days coming up, Wednesday and Thursday in the markets. So we want to watch both of those. That is something that the market could rally on, especially if it reduces the chance of that rate hike that we get, especially if it goes below 50% when we look at the CME Fed Watch tool. All right, let's go to Moo. There we are. Moo. All right. Oh, and I just made a Patreon exclusive video for the CPI where I put up the CPI projections that I have with my Excel spreadsheet updated for June. I'll put out another one for July when August rolls around. Actually, as a matter of fact, I can put that up pretty much as soon as we get June's numbers here in July. So I can put that up early so you can take a look at it. I was talking about Google there because they actually fell down below their 50-day simple moving average. And big tech was not the winner today in the NASDAQ. So let's get over to the Qs. There we go. So the Qs sort of stuttering a little bit. Possibly, maybe we start to see a double top happening here. Just a little mini double top. Nothing big like the double bottom that we got. If we zoom out a little bit, we can see a little bit better. And mind you, I'm still not coordinated. So if you're expecting me to be coordinated, I am so sorry to disappoint just as it happens. We really got this big old double bottom between October and then into December into January. So that double bottom, and then, well, the rest is history from there. So this little mini double top, I don't think it's something that sends us reeling and hurting way back down on the NASDAQ. I think it is possible that we smooch that 50-day simple moving average with these candles that we have happening with the Qs, which tracks QQQ is the ticker, tracks the NASDAQ 100. So I do expect some softness to come from that regardless of what we see. And I do think that there's a big rotation happening. And like I said, that watch list that I have of stocks available through the Patreon. Just click the link, sign up. You can find it down in the description there. Just head on over there and you can check out that watch list and that Tesla earnings projection. So a little bit of softness probably coming up for us regardless of what happens with the Fed in the near term that we have for the NASDAQ. And I think that broadening that we might have with stock prices could be something that really helps the NASDAQ to continue with a little bit more strength. We have student loan payments coming due, and I think there's a big hangover waiting for us come January. On top of student loans, I think a lot more is going to go to credit card for people living paycheck to paycheck and need that money to go somewhere, but don't want to disappoint during the holidays, don't want to give up lifestyle. And I think that January could be a pretty big thump to us. But that's not what this video is about. Let's move on to the SPY. There we are. All right, so for the SPY, we get nearly the same look, possibly another double top here, which could mean that we pull back a little bit. And again, back to about the 50-day, still lands us about to where this previous peak was, all the way back here in August of 2022. And maybe we get a little bit of a sideways market from there. We're going to have to see. I think there's going to be a rotation looking for where to find that value. And I think that the Q2 earnings are going to really kind of show us where those winners are going to be. And I expect there to be a lot of volatility throughout the markets across the different stocks and across different areas. So the CPI, let me break things down and I'll summarize this for you. So for the CPI, I think that the CPI for June, I don't think that is going to be very surprising. Probably 0.2 to 0.4 for core, with that 0.3 right smack dab in the middle. And it would be excellent to see that cool off a little bit and give us that weakness. I think those year over year numbers are really where we can take that focus, and maybe the Fed might kind of decide, hey, inflation really is coming down the way that we want it to. Now, mind you, services ex housing is going to be a large part of where it's at. Transportation could be something that they'll be like, yeah, big travel season, it'll probably cool off following the summertime into the fall. We'll see. Maybe they can kick that can down the road. Right now, it is looking like the most likely thing is that we get the rate hike in July. I thought June would be it, and then we would stop. However, the Fed doesn't really seem to think so. Now, mind you, if we get surprised by the Fed in July this time, it's going to be a good surprise for the markets. That's going to be a huge green day for the markets. I expect when the Fed comes out and talks, you get usually a decent drop in the markets at first, and then it sort of recovers after that. So you get sort of this shape when you look at the intraday charts for the Qs or for the SPY, whenever you look at those. It's usually a drop and then some sort of recovery. However, I think we might see an even steeper drop at first. A lot of breath holding, a lot of hesitation. Oh my goodness, lock this stuff in. And then as soon as they speak, if they say pause, if they say no rate hike at this time, that's going to be something the market's going to take off on. As a matter of fact, we see that at 2 p.m. on July the 26th, to mark that on your calendars, that we actually get that decision. And then Jerome doesn't actually come out and talk until 2:30. So be on the lookout for that. Trading Economics is pretty quick at reporting it, although you could probably see sooner in the markets what that decision has been rather than seeing it. If we get the rate hike, the markets will probably pull back a little bit. Jerome Powell will speak, and then we'll see if we get a further drop or if we rally back and recover some of those earlier intraday losses that we had just with that hesitation wait for him to speak. If we get the pause instead, where there's no rate hike to be done, that's something that I don't really think that we'd see that drop. I think that the market instead would rally, and then we would have more this shape where we'd have people like super jumping into it and then some people taking some profit off that little spike that we had there. So we'll have to see. A Fed pause at this point would be excellent for the markets. We'll see if they say that they expect some sort of trouble. Bank earnings could be something that also influences it, by the way. So absolutely. Bank earnings, by the way, I don't have my phone handy right now. The Moomoo app, I told you about the Moomoo app. Their mobile app will actually show you an excellent earnings calendar that you can actually track, and you even get some of the bigger earnings live where you get to listen to the earnings call and you can find out what is impacting the markets when you look at that. So for Moomoo, like I showed in my videos, let me bring it up here for you. If you sign up using my link down in the description, you can actually get up to 16 free stocks. Those stocks are valued from $3,000 up to $2,000. And here are the deposits: $100, $1,000, $5,000. And you can see the rewards you get. And the cash reward, deposit $100, you get $100 on top of it to trade with, and also 5 free stocks to go with it. So that's free returns for you just by signing up using my link that's down in the description. $1,000, you get 15 free stocks, $100 cash reward, and check it out for $5,000 deposit. That's all your money. You're not giving it away at all. 15 free stocks, total $100 cash reward still on top of it, but you also get a share of Tesla or Google. And let me tell you, between those two companies, I did say that in Patreon, I have my Tesla earnings projection. I didn't say the Google earnings projections because Tesla, I think, has the much larger by multiples upside and that's just a little bit. So you can check that out now over at the Patreon. You can get access to my CPI spreadsheet that's also over there, and also my watch list of stocks for the stocks that I think that people are going to be rotating into. For example, Zscaler today, I believe that I have on there. It's on my long list of stocks, and that one really did take off today. And there's lots of others there too. Some of them I was right about, some of them, a few of them I was wrong about, and there's still a lot that I'm still undecided because they haven't made their big move yet. And we have golden crosses coming up. We have double bottoms. There's also a short list for people who want to short stuff. All that stuff is over there. So all of this is an attempt to provide more value to you. So thank you guys for watching this video. I really appreciate the time that you spent in this. Get your free stocks from Moomoo. Sign up for that Patreon. Send any well wishes that you want to for me and my wife's baby, beautiful baby girl that we had born. She also has two sisters. They're 14 and 12 years old, and they I'm absolutely blessed, and it's absolutely incredible. And I'm also very thankful to have all of you watching these videos and cheering me on, and I hope that I'm providing that value back to you. And if that is the case and you would like more of that value, get those Patreon exclusives. If you haven't signed up for Moomoo, please do so. Not only do you get an incredible trading app that you can help to take your trading game to the next level, but you also are helping me to support this channel and my family that we have here as well. So thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, learning is earning.